What's going on, everyone, and welcome back to the channel. My name is Francisco, and today we're going to be talking about what is a value investor. Now, the main characteristic that makes a value investor is buying things less than what their intrinsic value is worth. So let's take, for example, Apple. Apple's a $100 company, and some negative news happened in the market. There's supply chain issues. Their iPhone sales are down a little bit. There's a new competitor that's coming in, and you know, there's all this talk, oh, the iPhone killer, and all these news put together puts a lot of downward pressure on the stock price. So this could create a buying opportunity. So let's say from $100, the company's worth $100, and it went all the way down to $80 because of all this bad news. So that difference of $20 presents a potential gain of 20%. So that is when a value investor strikes. They buy it, they know how much it's the true worth of the company, and they see there's a discrepancy and there's a misjudgment in the market, and that's when they go in and just buy it to be able to get the profits. Now, it might take some time before, you know, the negative news spins around and then finally say, oh yeah, iPhone's doing well, a new product and new services that are coming in for the company. And all this is driving revenues up. Now, the reason why I love value in the value investing strategy, why I think it's so good, is because there's proof that it works. There's like 80 years, or not 80, but probably like 60, 70 years of proof that it works. Warren Buffett is probably Warren Buffett is the largest, well-known, wealthiest value investor of all time. He has a net worth of over $100 billion. He's been doing this since, I think, the 40s, 50s or something like that. He read The Intelligent Investor that was written by Benjamin Grant. Benjamin Grant is the godfather of value investing. He wrote The Intelligent Investor, and from then on, everybody started reading and could understand what a good investment versus a bad investment was. Before it was probably murkier, muddier. But this book came out, Warren Buffett read it, and he just instantly fell in love with it and understood what how to be a very good investor. And it's to buy things worth their intrinsic value, their book values, and just be able to profit and make money off of that. Now, there is also the ability to buy companies worth their that are worth less than their book value. So what is book value? So that is, let's say the assets of a company are worth a certain amount. Let's say they're worth $100. However, on the stock market, that same company is trading for $60 because the products and services that it's making aren't generating that much revenue. But the general population doesn't understand that this company might not have, these crazy numbers that it's pumping out for revenues and profits and all that stuff, but it has a lot of real estate, it has a lot of machinery or patents or something along those lines, and those assets are worth a lot of money, especially the real estate. Depending where you are, you can sell a bunch of real estate and get a ton of money. So you could be buying the company, and should it liquidate tomorrow, you are not just getting what the company says it's worth on the stock market. You're getting a portion of when they sell all the assets of the company. you're getting a portion of that, which is going to be way more than what the stock is trading at. You're just going to have to wait and be patient and get your money. You don't get your money right now because you can trade it on the stock market. You got to wait for it to liquidate. You might get your money in a year, but if it's 30%, an increase of 30% of what you paid to buy it on the stock market, and then you're selling it to private sellers, that's, for my books, that's a worthwhile thing to do. Now, the biggest examples of value investors, obviously Warren Buffett. He has been doing this for a very long time. It works. That's all he follows. That's all he preaches. And Charlie Munger introduced to him a different kind of approach, I would say. Before, his value investing approach used to be like a cigarette bud kind of approach. He would go out and find companies that were, very in rough shape. However, they still had one puff left. It was only good for one puff. It wasn't the greatest, but it's free. It's one puff. So a company that might be worth $100, but he found it for $90. Now, he buys it at $90, and as soon as it hits 100, sells it immediately, no questions asked. And then he moves on, finds another cigar butt, and he keeps going and repeating that over and over. And, that can be a very tedious thing to do. So what Charlie Munger's approach was for a value investing strategy was to find very, very high quality, good companies. And they would buy these companies, and then the stock price would compound over and over. The services would get better and better. The products would get better and better. And the competitive advantage that the company would have would increase. And you could hold a company for not just one, as soon as it hits what its value is, you could keep holding it forever, over and over and over. Like buying the Walmarts, buying Amazons, Best Buys, Coca-Colas, Apple, Google, all of these high quality big companies, Johnson & Johnson, all like Kellogg's. And that's how Charlie Munger changed his approach. Now, Charlie Munger owns only 3 stocks in his portfolio, and they're all value plays as well. It's Costco, Berkshire Hathaway, and he has some Chinese stocks with Li Lu. Li Lu was also a value investor but he does most of his stuff in China. However, Charlie Munger refers to him as the Chinese Warren Buffett. Other examples are Monish Pabrai, Guy Spears, and all of these are kind of in that umbrella of Warren Buffett's disciples. And that's why I think value investing is such an amazing strategy to use when pursuing an investment career, if that's what you want to do, or not even a career, but if you just want to do it on the side and then find these companies, because it's just proven to work over and over. Most of the investors that follow value investing are very, very successful. I'll show you a short clip of Warren Buffett. Thank you very much for tuning in. And I hope I'll see you next time.
If you buy things for far below what they're worth and you buy a group of them, you basically don't lose money. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. Yeah. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is. Defining your area of competence in valuing businesses, and then within that area of competence, finding whatever sells at the cheapest price in relation to value. And there are all kinds of things I'm not competent to value. But there are a few that I am competent to value.